Let's talk to David Paul. He is the Managing Director of VectorVest UK. Very good morning to you, David.
Good morning, Mus.
Right, we have a number of thought-provoking slides. Let's kick off without further ado. The first one, the UK market timing. If you've watched this before, basically you have a long-term signal and a short-term signal. What are they both telling us at the moment?
Well, they're both down. The short-term trend is down. Longer-term trend is down, and our advice is not to do anything until the market turns. We advocate buying undervalued stocks that are growing their earnings aggressively, that are rising when the market is rising. And although there's lots and lots of shares where the fundamentals look good, the general market looks a bit sick, although it may be about to turn.
Okay.
May is an interesting word.
Yeah.
On the next slide, in fact, I've got the FTSE 100. After that drive up the page, strong momentum move in April, we pulled back in three waves, and as we speak, over the last couple of days, the market has been finding support at a level that Fibonacci scholars look at, the 62% retracement of the last range. It pulled back in a three-wave pattern, which again technical analysts look upon as bullish. It was a pattern made famous in a book by a fellow called Harold McKinley Gartley about 100 years ago.
Right.
And that pattern, if that level can hold, could easily precipitate quite a strong move up the page. So as ever, I'm reasonably optimistic. That level's a very important level that we're fighting for on the FTSE 100 over the last couple of days. When I last looked, it was still intact. When I last looked.
Okay, well, let's move on to the next slide. In terms of the US market timing, what's basically short-term and long-term on this?
Well, the short-term trend is also down, and we advise not buying any shares there.
Right.
But the longer-term trend is hanging on, as my granny used to say, by the skin of its teeth. The bull market in the US is still running, and both myself, my technical model, and the founder of VectorVest, Dr. Bartolito, has got a fundamental model, and we both believe that the bull market is still running. The bull market is mature, but nevertheless, as I've said on your show before, we believe there's one final kick in it.
Okay, so a little bit of life in the ninth innings.
Yes.
Okay, so we've got 4 slides to come up now, okay, with some stocks, okay. So what are these? Are these on your radar and you're ready to pounce once you get the buy signal, short-term and long-term?
Quite so, yes. And these ones that I'm looking at this morning are turnaround situations, shares that have sold off a little bit, that are now on buy recommendations that we believe are going to prosper when the general market turns.
Okay, so let's kick off then with Hastings. So this is a turnaround story, is it?
Yeah, of course. Well, Hastings had a nice run up the page, as you can see, and then it sold off over about a year, and it fell back to a level again that Fibonacci scholars like to buy into, and it was accumulated at that level. It's broken the downtrend, and for those technical analysts watching, on the MACD indicator, there's a very strong reverse divergence, or what some technicians refer to as a slingshot, which invariably precedes quite a strong move. Now, I wouldn't be at all surprised if there's any weakness left in this market. I wouldn't be at all surprised to see the darn thing pull back and kiss that down-sloping trend line before moving up the page. So I think if you keep your eye on that, there's a good chance that you'll get a better level than it's sitting at the moment on a little bit of a pullback back to that trend line. Nevertheless, the best ones never pull back, as you know.
As we well know that. Okay, so let's move on to the next slide. Taptica.
Again, Taptica, a really good story, this a company that's growing very strongly indeed. That's a weekly chart since its listing. And it had a very good run up the page. We did very well in it. And then it pulled back in 3 waves. And then for 2 months, it was actively accumulated, again at that 78% level, which is a very important Fibonacci level that Fib-oriented traders, and there's a lot of them around, like to sort of stick their toes into the water. It's moving up the page. It's on a buy signal. Last night it did well after I did these slides on their close, I suppose, the night before last. So it had quite a good day yesterday. So I think that that's poised for a nice move up the page towards those old highs.
Understood. Okay, let's go on to the next slide. Barratt.
Well, Barratt, I picked from the UK house builders. As you know, they Help to Build has been extended to 2023, I think. Barratt sold off, as did all the house builders after the vote, and you can see that on the left-hand side. It then made a nice thrust up the page in 5 waves for any Elliott people watching. And then it's pulled back on a perfect flag, a 5-wave flag pattern, and it's breaking presently above the top trend line that defined that flag. It's undervalued in Vector Vest, it's growing earnings quite strongly, and it's on a buy recommendation. As soon as the general market turns, I think we'll see an advance in Barratt and probably all the house builders. There's a very strong seasonality in UK house builders that I've been watching for the better part of 30 years.
Right.
They tend to run from October to May.
Okay.
Every year. Not every year, but there is a seasonality there. So with this pattern, it's undervalued, and with the seasonality, and if that 62% level on the FTSE can hold, which I'm optimistic that it can do, then I think that we'll see an advance in probably all the UK house builders. I like Barratt best because the technical pattern is saying hello to
Strongest.
me. Yeah.
Okay, let's wrap up with the last slide. Cranswick.
Well, Cranswick, I featured on your program many times. I like the look of it at the moment. It's growing earnings very strongly. It again is moved up with the market in April. It's pulled back in a fairly textbook 5-wave flag pattern, and it's not quite on a buy recommendation yet on Vector Vest, but I think if it breaks through the top of that flag and turns into a buy recommendation and the general market rights itself, then we'll see a very strong advance in Cranswick. I have a long-term target sitting about £30. I have a long-term target in Cranswick somewhere between £40 and £42.
Well, right, just to wrap up this segment, the FTSE cash level to watch out for is?
It's about 7,200 odd, yes.
7,200, a key Fibonacci chart point, and you would hope that holds as a key support level below the market.
If that level holds, then I think we'll see a strong advance, yes. And I remain very optimistic. There's one last kick in this bull market worldwide. Ray Dalio says there's another 2 years in it yet, and he runs the biggest hedge fund in the world. But
I was going to say, that sounds like a very long 9th innings to me.
Yeah,
on that note, David, thank you very much indeed.
Well, thank you.